Can pensions really help onboard millions? Retirement and crypto. Two words you probably wouldn't have put together a decade ago. But here, in 2025, the two are colliding, and the implications could be massive. Let's start in the United States. Back in August, the White House issued an executive order called Democratizing Access to Alternative Assets for 401k investors. For the first time, crypto was explicitly included as one of those alternative assets, and just a few weeks ago, Congress introduced the Retirement Investment Choice Act, a bill to codify that executive order into law, moving crypto inclusion into retirement plans one step closer to reality. Now, let's zoom out globally. In Australia, self-managed super funds, retirement accounts that individuals control, have become one of the most important retail pathways into crypto. Allocations there have grown nearly sevenfold since 2021, now worth about 1.7 billion Australian dollars. In the UK, appetite is also growing and things are changing fast. A recent Aviva survey showed that 27% of adults would consider adding crypto to their retirement portfolios. Nearly half of them said that they were motivated by the potential for higher returns as parts of their retirement portfolios. In a positive regulatory move for UK crypto investors, the FCA recently lifted a 4-year ban on crypto ETNs, which stand for Exchange-Traded Notes. All right, exchange-traded what? Think of ETNs as a simpler, safer way for traditional investors to get crypto exposure. Instead of buying Bitcoin or Ethereum directly, you buy a note, kind of like an IOU, that tracks the price of that crypto. It trades on the stock market like a regular fund, and you don't have to deal with wallets, keys, or exchanges. For pension funds and retirement accounts, that's a game changer. It means crypto can fit inside the traditional system without changing how people invest. Across the EU, MiCA, the Markets in Crypto Assets Framework, continues to roll out in stages. This provides a harmonized legal structure for digital assets across 27 member states, giving institutions, including insurers and pension funds, clearer rules if they want to add crypto exposure. Until now, crypto was often seen as a speculative side bet, something for your trading account, but not your retirement plan. But 2025 marks a real turning point. Governments are writing rules, pension systems are testing exposure, and regulators are under pressure to move faster. The effects could be profound. Retirement money doesn't chase quick profits. It's long-term, sticky capital. That means more stability, more legitimacy, and more scale. So, pensions, one of the most important gateways for crypto adoption worldwide? Well, why not?